What's up, folks? This is Eric from Option Edge, and in today's video, I want to see if Bollinger Bands like this give us a signal to get long using options in a particular underlying stock. Let's get into it. So right now I'm looking at AMD, and you can see that the Bollinger Bands right here, there's a Bollinger Band to the upside and to the downside. This Bollinger Band is 2 standard deviations from the middle band, which is just a simple moving average. So what I wanted to see is when the stock crosses down below through the bottom Bollinger Band, if there's any type of log signal, and if we could utilize options to have enhanced gains. So I have backtesting software to test this hypothesis out. So let's see how it works. So I have a portfolio of stocks here, which are most of the mega cap names. You'll probably recognize Apple, Microsoft, a couple other like Dow Jones components like Boeing, Caterpillar, and a couple, Walmart, Costco, and a couple random software stocks like ANET, ADSK. It's a mixed bag of stocks, so that's the point. So let's go to our software. So the first test, we're going to see if in the past 3 years, whether getting long a 30-day, just simple call option, we're going to get long. We're not going to trade earnings. We're not going to have any type of technical parameter. So we're not going to do the Bollinger Bands yet. And then our closing criteria is we're going to close this trade out if there's a 50% gain at the end of the day. And then we're also going to close the trade if we're losing by 50% at the end of the day. Okay, so nice 1-to-1 risk-reward ratio there. So let's see how this plays out. All right, you can see there was a $100,000 return for this whole portfolio here with an average trade percentage win of 5%. So this is with no technical parameters, so that's pretty strong results. Just simply getting long a 30-day call, and I forgot to mention that it's a 40 delta call, and the number of contracts is defaulted to 5 here. So now let's go and test the Bollinger Band parameter. So we want our stock to cross down through the lower band that is 2 standard deviations width. Hit save and let it run. So in the last 3 years, our return is only a 67K compared to that 100K, and our average gain per trade it's a loss of 0.67%. So not the best results. So let's see if there's another strategy that could potentially benefit from the Bollinger Band trade. So we're going to change from a call to a put spread and see how that fares with the same criteria. So let's do a put spread, but we're going to do a 40-30 delta put spread. So we're short the 40 delta, long the 30 delta. And then for when I'm short options, I like to have no stop limit and let the probabilities play out. And then we are going to select normal time, not trading earnings, and we're going to let it run and see how this strategy works. Okay, so simply getting short a put spread with no opening criteria is going to yield almost an 80K loss but your average trade is positive, average trade percentage, win percentage. The average gain per trade is slightly above 0, which is better than nothing. But overall, this is a losing strategy because based on the total return. So let us see how this let's see how this strategy fares with the experimental Bollinger Band technical open. So set it and forget it, let it run. Okay, so our total return is almost 30K, and our average win per trade is 0.6, and our average gain per trade is 0.63%. So not bad, but still nowhere near as good as the just buying straight up calls in these names. All right, now here is another strategy that I'm backtesting. So these are the results after putting on a diagonal strategy, and I will show you what that strategy is, but here are the results, 30K total return. The average return per trade was 2.75%, so that's a little bit better, but still not better than just straight up calls with no technical parameters. And let me show you guys what this trade is. So this is the trade here. So you're getting long a 50 delta call that expires in 60 days, and then you're getting short a further out of the money 20 delta call that expires in 30 days. And then There's the only closing criteria here is you just close this trade when the short front month shorter dated option expires. So there's no stop limit, there's no gain limit here, and that's the trade. So let's put this trade on with no technical parameters, and you can see the average return per trade is 13%. So far, this is the best average return per trade. The total return still is less than just buying straight up calls. All right, so here is a summary of the total return per strategy and then the average return per trade for each strategy. So you can see here, just getting long calls with no technical parameters is actually the best strategy, which I'm pretty surprised about. A put credit spread, no technical parameters was a terrible strategy. And then, you can see here, we had a couple decent strategies here. And then the average return per trade, the most consistent and best returns came from the diagonal spread with no technicals. So I was actually surprised to see that technicals really actually hurt our returns and our average return per trade. So kind of interesting. Thought we'd get more of a signal from getting long Bollinger Bands when something was super oversold. That's it.